The latest trends in work from home practices in the U.S. are out. This information is collected through the U.S. Survey of Working Arrangements and Attitudes, gathers monthly data from 2,500 to 10,000 U.S. residents between the ages of 20 and 64 about the number of full pay working days worked from home. Data is organized by industry and worker characteristics, too. Here now with more is our chief equity strategist and economist, John Blank. John, what are the broad trends in this new data, starting with the work from home rate?
Yeah, Terry. So during COVID, of course, we're all working from home. It was about over 60% of work from home in the United States. Today, we're down near a quarter. So a quarter of us are basically working from home still. And that includes, Terry, hybrid arrangements where people are going into the office a few days a week, and fully remote arrangements, which is basically half of that. So 10 to 15% of the U.S. workforce is fully remote and staying remote. And that's been very stable. But the hybrid arrangements have been declining. And that's been a lot of what's happened from the 60 to the 25. And now it's still, trickling downward because companies are getting stronger in their negotiations with their workers and getting them back into the office.
So comparing it with working on site, is working on site like leading right now?
It's just a matter of a negotiating benefit. It's an intangible benefit. People have earned they like to work at home and avoid commutes and work with their families. And people in offices that are manage them find them to be unproductive and want to drive them back into the office to supervise them. So when work from home hybrid rates fall, that's telling you that the power is shifting back to the manager and away from the worker.
What about the demand for office space? Does this mean that it's going to suffer or not suffer?
Terry, we have a vacancy rate over 18% in the United States in offices, which is, when I say a 25% hybrid rate, you've got the analog. I mean, the people that are working from home are leaving these offices empty. And so we now have a massive chance for conversion of offices because 18% of office supply is now empty. And sooner or later, this has to get underway, but it's very complex and it's very costly to actually do this.
You wrote recently that the U.S. labor market is settling into a new equilibrium. What does that mean, especially since more employers now are less willing to offer the work from home option?
This is exactly what we're talking about, Terry, particularly for women. It's about 27% women that want to work from home versus about 22, 23, 24% for men. Women in particular like to, be home with their children and get them to school and then take care of errands and stuff like that surround building a family and running a family. And so it's becoming much more important for women than men. And this is a part of this whole story where the entire structure of the economy is being changed by this trend. And it's a very dramatic one, and it's a permanent one, Terry.
Which sectors then are impacted by these trends?
Well, the most physical activities like construction and leisure and hospitality have the lowest work from home rate because you've got to be on site for that. But the highest ones, Terry, and they're in the 40% area, are finance and insurance, like people like us, info tech, and people who have computing abilities. And then beneath that, somewhere in the middle is the government, which is about somewhere midway, which is not as strong as people think, but not as high as people like us get, which is work from homes are in the 40s and government's about 25%.
What about the current layoff rate? How does that factor into this story?
Well, the layoffs happen when there's pressure on companies to perform better from a profitability perspective. And so people that work remote are often the first to go because they don't have the political clout that the office dwelling person, a FaceTime person has. So there is an issue of not having as much clout when you work remotely versus people who do.
And what does this mean for the job market, especially according to published reports, those laid off workers now are finding it harder to find new roles?
Well, that's it, Terry. We have yet to be in a recession where there's a remote workforce in place. And this is something nobody's really thought a lot about. What is happening when people get laid off and they're staying at home? How hard is it to find a job? They've been isolated from their peers. A lot of networks have decayed for many years. And it may be, part of the reason that long-term unemployment in the United States has stayed high and is sticky for so long is it actually is much tougher when you start remote working to find another job in the same way.
And what does this mean for the overall U.S. economy going forward?
Gary, it's unknown. I think there really is going to have to be an experience of trial and error through a recession that will probably change the way job searching happens once people understand how difficult it is. And again, it's going to be a case of where companies and managers with the jobs are going to make the decisions. So a lot of this will be determined on that side of the coin.
Most recently, you had your eye on three large market cap stocks in clear uptrends. They include Las Vegas Sands, Take-Two Interactive, and Goldfields Limited.
Yeah, so let's talk Las Vegas Sands, the gaming stock. You might know that Las Vegas is in a downtrend and people are not going there as much. But this stock doesn't show that. And why is that? Because a lot of Las Vegas Sands has invested in Asian casinos, and Asia is actually doing quite well in this market, and the stock is rising on that. So first off, leisure and hospitality still remains strong globally in the face of people continuing to enjoy travel in this post-COVID world. So that's one to keep in mind of.
Take-Two Interactive.
Take-Two Interactive is, a tech stock, Terry, and whatever anyone says, that you still need to have tech stocks in your portfolio. Take-Two Interactive has been a really strong performer, and you should know about it. So I'm going to keep that one out there and put it on everyone's radar screens.
Goldfields Limited.
Goldfields Limited, of course, this is one of the biggest gold miners in the world, Terry, and we've had a huge run in gold prices. So what's interesting is, obviously you mine gold, you can sell gold at higher prices, the stocks are worth something. The question is the top in on gold, and is the gold miner trade over? So in this case, I might be a seller of Goldfields Limited at this point in time because the stocks, the prices of gold are so obviously in a correction phase. But that may change, Terry. So you certainly should know that, at least from an analyst perspective, people are still looking into gold mining stocks at this point in time.
Our chief equity strategist and economist, John Blank, on work from home trends with John. I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.